do we need to have all our businesses incubated before they are given grants or funding?
What needs to change is the way onboarding is done for banks. You can have a card without having a bank account in some cases, but in Ghana today, about 60 to 70% of cards exist because people have accounts. The fact that you can sit in the comfort of your home, pull out your plastic or your card and then punch in the 16 digits and effect a payment in a secured manner directly from your account into Haptel's account or any other merchant's account, is genius, right? And whoever is making that possible should get paid.
Hello everyone, welcome to Building Bytes, where we tell relevant stories about Ghana's tech ecosystem to drive growth and innovation. This is a show proudly brought to you with production support from Haptel Academy. Today we are having a very interesting conversation. We are hosting Emmanuel Sarpong-Oduro, who is the Managing Director of MDP Ghana, West Africa also. Emmanuel has a rich background in card business development, having worked with major banks like Fidelity Bank, GT Bank, and EcoBank. Today we'll be exploring the evolution of card payments in Ghana and learn about what happened before, what is happening now, and the future trends. Before we do that, let's get into what's happening in tech.
Okay, so what happened in tech is brought to you by Tech Library, and the first news item is Ventures Platform Climate Tech White Paper calls for climate resilience business models in the African tech sector. So Ventures Platform is a leading early stage VC fund in Africa, and it has launched a white paper titled Innovating for a Sustainable Future, Leveraging Venture Capital and Startup Innovation to Combat Climate Change in Africa. Now, they are saying that Africa is responsible for less than 4% of the global greenhouse gas emissions, and so Ventures Platforms report underscores how African startups and VCs can build climate resilient business models to tackle these challenges. So the white paper is in 3 parts. It's a 3-part framework. So the first part talks about adaptation, the second mitigation and enablers. So adaptation is basically developing a climate resilient infrastructure and sustainable agriculture. Mitigation is promoting renewable energy and sustainable land use, and enablers, enhancing financing mechanisms, policy frameworks, and technological innovations. So this is the white paper that Ventures Platform has presented. What do you guys think about this?
Do you have any opinion on it? No, I think it's interesting looking at the SDG goals and standards and where the payments industry is also going. It's interesting to see that, this white paper has been developed and it's setting the tone for, bigger conversations to be had in this space.
Mm-hmm.
Yeah, I think I'm very interested in the funding parts that was mentioned. I think most think I was in the last Ghana Innovation Climate Center, their last conference that they did symposium, and I think Aloysius from Farmerline mentioned that these farmers, they don't really care about the SDGs and stuff. They just want to survive. So I think if you're being financed and there's financial motivation for them to have sustainable practice, I think is very necessary so that they get results out of these practices and they just don't lose money because they're trying to be sustainable because they want to make a living. So I'm very interested in the financing parts and it's very needed.
Yeah. All right. So the second news item is Ghana's SEC, that's our Financial Securities Regulator, has approved 2 operating licenses for crowdfunding businesses, Grow4Me and Ingu FinTech Services, to crowd in investments and boost entrepreneurial growth. This milestone marks a significant leap forward for Ghana's burgeoning digital economy and opens a new avenues for funding entrepreneurs and small businesses. Yeah, so congratulations to Grow For Me and Ingu FinTech. And I don't know if anyone wants to say something about the
I mean, it was
impact
always
of
going
it.
to be the natural conclusion. I
Yeah.
mean, looking at how advanced our digital economy is, here in Ghana, I'm not surprised that we are actually licensing, the likes of these players to actively, play in our space.
I think they are the first to be
Yeah, I
licensed.
think that they're the first two companies, but I think before this, there are a lot of players in that space. I think it's a good thing to have you being regulated by an institution.
Yeah.
And I mean, it also builds trust for people who are going to save with you, or people who are going to crowdsource or help you crowdsource money. I think it's a good thing.
Yeah. And I also learned that Grow For Me they played a pivotal role in the licensing and the kind of policy that affects the crowdfunding. So I think that is great because if the players are contributing to policy, it makes a lot of sense because down the policy would benefit them, and all the entrepreneurs who are looking forward to crowdfunding, like what you mentioned. The next news item is Ghana Climate Innovation Center selects 25 green businesses for the latest incubation program. And some of these green businesses include some of the well-known brands: Skin Gourmet, Agri Makeup, Royal Baobab, X and more, and there are 25 of them. So they have inducted 25 businesses, that's the Ghana Climate Innovation Center, into cohort 10 of its 9-month incubation program. Yes, so that is there are 13 female-led and 12 male-led enterprises. Yeah, so that's the story. What do you guys think about that?
It's interesting. I think I like the approach where the kind of climate innovation thing. I think they support business that are doing more impacts. I mean, it's not just impacting the area of climate change, but business also supports the local economy, especially women and other marginalized groups. So I mean, congratulations to the people that made it in the cohorts. King Kome, they've been around for quite a while, almost a decade.
Yeah.
They're doing great stuff. They giving back to the community. Congratulations to them and all those that's in there. And hoping to see them make more impact and support our climates.
Okay. But I have a question on that. Do we need to have all our businesses incubated before they are given grants or funding?
Probably, I don't know. I think this where the GCIC wants to target. These are the businesses they want to target. So, I mean, there are probably other programs that are targeting early stage and early stage and idea stage companies. But I think probably these are where their partners want to make impacts. Probably want companies that are at that stage and take them to the next level. So, yeah.
Or maybe there's a trust issue somewhere.
No, I mean, because a company like Agri Makeup, they have been incubated severally in Ghana, even outside the country. So, if you are going to fund them and you are going to give them another 9 months, is it 10 months? Yes.
I don't know the nature of the incubation, but probably it's not that. I think I know a little bit. It's not. You just run your business. They check up on you. It's not
reporting
like,
to them at some point.
Yeah, it's not like coming
It's
to.
not intensive.
Yeah, it's not very like
It's not a training program.
coming to an incubator like me. But I think they have to monitor their progress and the impact that they are making.
Okay.
If is bringing the results that they are, but I don't think it takes them off their work.
Okay.
Yeah.
And the last news item is that Oyster agribusiness has gotten $610,000 follow-on funding from Social Enterprise Fund for Agriculture in Africa. Sile Capital, fund manager for the KFW-backed Social Enterprise Fund for Agriculture, has provided a $610,000 debt facility to Oyster Agribusiness. This working capital loan will enable the company to support more smallholder farmers, enhance productivity, and scale its climate smart agricultural practices. Yes, so debt financing for agribusiness Oyster.
Very interesting. I think agribusiness tend to take a little bit more debt financing. I think Complete Farmer did something like that recently,
Yeah,
if I'm not wrong.
yeah.
Yeah, because there's a lot of money in there. So, yeah, they're able to pay back. I mean, they produce tangible goods, probably sell it to off takers and stuff. So, they're able to pay back much more quickly. And, it's helped the business. It's not every time that you could do equity. Because the process is long, and also somebody comes in to tell you how to run your business and stuff. So, yeah, good for them. All the best.
I don't think these days a lot of agri-techs are raising here and there. Don't see a lot of fintechs like
Yeah.
in other places.
Yeah.
I think it's interesting.
I have a question on this, right? For agribusinesses, is it all agribusinesses that can raise debt financing? Or it has to, what are some of the things an agribusiness should look out for before they even think about getting a loan facility?
I think if I may, I think your ability to raise either debt or equity is a function of your business model and what the shareholders are looking at and looking for. So looking at the nature of agribusiness, like he said, it's more debt driven because these are predominantly either farmers or people who have knowledge in the farming ecosystem. They know how to drive, they know how to create returns. They believe that investing in or getting investment in the form of debt would help them recover their returns in a much quicker fashion, because farming is in seasons, right? There's a growth season and then there's a reaping season, and you need to be prepared for both. So I think it's a function of the business model they're running.
Okay.
Yeah.
All right. So that's it for what happened in tech. Over to you.
Thank you very much. So move on to the main conversation. Today we are trying to learn about the evolution of card payments in Ghana, and we are learning the past, the present, and then the future. So I'll read a little bit about Emmanuel, and then we'll get into the conversation. So Emmanuel has extensive background in card product development. He has worked with some of the top banks in Ghana, and currently he's the director manager at MDP. He leads efforts in delivering end-to-end card payment solutions across multiple industries in West Africa. So before we get started, I did some research into card payments, and I realized that somewhere in 2014, our penetration was around 8%. But today if I say 2014 was 8%, we'll be expecting it to be somewhere around 20 or 30 now, but it's still around 18%. So first, I want us to have an understanding of what used to be in the past, and then how is it going now.
Okay, thank you very much, Yao. And I'd say hello to your viewers and listeners. To start with, I would say having a card is a function of whether or not you own a bank account, because the key drivers of card payments are banks, and they promote the issuance of that particular product. Today, if you look at the banking population in Ghana, for instance, it used to hover around 30% of the bankable population. Now we've gone up to somewhere around 45% being banked, right? And once we count the wallets, we grow into significant figures. But you appreciate that the bankable population is actually low, or the banking population is actually low, and that informs how low penetration on cards are. Cards also have, other nuances that may not necessarily inure to the benefit of the average person who would want to enjoy banking services. There's also the literacy gap around the area of cards. And so if we date back to how it all began, in Ghana, we saw cards being introduced in a form of magnetic stripe plastics, right? Somewhere in 1994. So the then Meridian Bank
I think the
introduced the
magnetic
first.
stripe is those guys that had the black stuff.
Yes, so you see the
Yeah.
black
Stuff, yeah.
stripe at the back of the
Yeah.
plastic,
think
and
so.
and that is where the information was held, right?
Oh,
So people will ordinarily be holding, cards with that black stripe, and we will be transacting by swiping that card or
Yeah.
by inserting it into an ATM. So there are very few acceptance machines for that, right? And also, it was due to the costs, involved in procuring or acquiring those machines at the time. In 94 as well, we had the likes of Stanchart introducing their own closed loop cards, right? I think they were closely followed by Barclays.
So just to catch you at this stage, they were all independent. There wasn't a network.
So from inception, right, banks had introduced cards for access to cash, right? They were trying to solve for a major need. Now, that need was being able to draw funds from your account when the bank was closed to the public. So these banks came up with cards and issued it to their customers so that when the bank was closed, they could go to the automated teller machine
yeah.
and withdraw funds. And you can sense how the behavior has stuck with a lot of Ghanaians up until this day, right? So that's how it started until somewhere in 97, when a bank like SGSSB, at the time it was called Society Bank, and they came up with a card that had stored value embedded on a chip. Okay.
What store value?
Right. So the concept of putting funds in a virtual space is referred to as stored value in the card ecosystem, right?
Okay.
And so what SGSSB rolled out then, they called a Sika card, if you recall. Sika card was a card that had a wallet complementing the plastic. So you would ordinarily walk into an SG branch, load the card or load the plastic with funds, and it'll be credited onto the card, and you'll be able to transact with that card.
Was it similar to virtual card? How different was it to the standard card at that time?
So I'm building the point. Now, this is how all this infrastructure began,
Okay.
right? So what SGSSB as an example of a bank did was they saw the gap in the market, and the gap was banks had introduced cards, but they had introduced it for their customers.
Yeah.
Now, SG came and said, you do not need to be a customer of the bank. If you have funds, bring it and load the card. And so they tagged the card as safe in your pocket,
Interesting.
right? So I don't know how many of you were around in 97, but in the high schools, people would give a Sika card to their wards, and they'll be able to draw funds from it when they go to school, right?
Interesting.
Soon after that, another bank, that was Ghana Commercial Bank, decided to innovate beyond what Sika card had done. And so they partnered with a company called Mondex International to come up with Mondex card. Now, the Mondex card was an international card, and so it wasn't closed loop, right? When I say closed loop, I mean being able to work outside of, the ecosystem that is currently used to. So with the Mondex card, you could travel outside of Ghana and you could transact with that card. Right? Now, this partnership was managed between ADB at the time and GCB. So this was somewhere in 1998, 1999, right? Now, that's how the solution of card payments evolved, right? Soon after, we had Barclays Bank coming up with the point of sale terminal. And at the time, it was what we call the Zap Zap or the Zip Zap machine, right? So you place a card on the machine and you have sort of like a check on it. When you run the machine like this to be able to take funds from the card. That's how point of sale devices were introduced into the country. Prior to that, StanChart had introduced the first Visa card somewhere in 1998. And so if you see how the solution was introduced into the country and how it was introduced, it has informed how the average Ghanaian has stuck to the usage of card. The point of sale was introduced much later in the picture. We were used to ATMs. So today, if you take the average transaction that happens on a card, majority happens on the ATM and very little go on the point of sale and on online terminals. So that's how the space has been. So just to give you context on where we've come from and what it is we're doing in terms of penetration.
Okay, so that's a very deep background we've just gotten. Right now, let's have an understanding of how it is now. Also, using insights from where you currently work, how are you guys leveling this up now?
So, MDP, by way of introduction, is a payment processor that has about 3 or 4 verticals, under our business model. So the first is card production. So what we do is we produce the plastics from scratch, right? Now, there's a whole security apparatus that surrounds the activity of card production. And it dates back to the introduction of EMV, which is Europay, MasterCard, and Visa, coming up with security standards that inform the chip and pin, infrastructure. So that is what we do. We produce and personalize the card. So we are the link between cards, the banks, and the schemes, right? So the schemes here are Visa and MasterCard. So we connect banks to Visa and MasterCard so banks can issue these cards, to their customers. What we've sought to do is to alienate the idea that a card is the most complex tool that can complement your account. So today we have instant issuance, we have instant cards. People are able to walk into their banking halls and immediately get a card. And all this is technology and infrastructure that is powered by MDP. We've operated in Ghana for a number of years, since 2014. We have about 6 to 8 banks that we currently work with out of the 23. And we are actively growing our base. We pitched camp in Ghana, in Accra, this year, and the journey has been good. So helping the average customer be able to go into the bank, get their card instantly is our primary objective, because prior to 2018, 2019, most banks here in Ghana would be ordering their cards from abroad. And so
take like
the
6
lead
weeks
time
to come in.
the lead time to get your card will be in excess of 10 days upon request. And that cannot be banking today. You will get a SIM card and be able to transact almost immediately with your mobile money. And we believe that cards should be able to get you there as well.
I think for the bank I bank with, you're able to renew your card instantly. So you just walk in and then renew it. I want us to talk about the card trends as it is now. So if you are in Accra, almost everywhere you pass, there's a billboard just to do it. Your bank telling you they have the coolest card, come get it. But yes, still the penetration is very low. And as an expert, why? Why is that the case?
Right. So I think going through the history, that I walked you through, you would understand why it's difficult for the penetration to necessarily rise, right? It's also because cards have been very slow to react to the penetration of the mobile phone, right? So like I indicated, we had wallets working before the mobile phone was introduced. So cards were working with wallets and wallets were complementing cards. But once the mobile phone was introduced, cards were slow to react to that. And so today we have people who would actually have to go into their banks, perform the necessary KYC before they can have their cards on their phones, right? Whereas, with a wallet, once you validate yourself with an ID, a Ghana card, you immediately have your wallet and you can transact. I think we need to get cards to that point where the acquisition and the KYC is lowered and it's matching that of the wallet. Until we get to that point, we would always see cards having a very low penetration than wallets currently do.
So I'm going to go ahead. So you mentioned get to the point. What do you think policy plays in this? I think policy is there to address an issue, but how do you think it can also balance itself, so that we could have a higher penetration rate? What do you think the role of policy plays in all of these?
I think regulation has helped. I mean, in every ecosystem, you need regulation to sort of guide the players so we don't veer off or go overboard. But if you ask me, I think what needs to change is the way onboarding is done for banks, right? Cards are complementary tools for bank accounts, right? And you can have a card without having a bank account in some cases, and I'll talk about the differences, in the card types, right, and how that is possible. But in Ghana today, about 60 to 70% of cards exist because people have accounts. Now, you look at the way onboarding is done for bank accounts, and you look at the way onboarding is done for wallets, and you can easily tell the distinction or the differences. Why one will, be slow to grow and the other will be very quick to grow. So until we change the onboarding, or until banks change the onboarding, cards would always be impacted.
Do you think there's an issue that exists with the bank, or it's an issue that exists with regulation? Because I think we spoke to Tarek, I think some couple of months back, and I mentioned that banks do have like separate system for everything they run. If you want an account, there's a separate system behind it. If you want a card, there's a separate, infrastructure behind it. So it's not merged. It does not work cohesively, and so you have to do KYC for every product that requests. Do you think it's an issue with the bank and their systems, or it's an issue that regulation has to catch up with?
By the way, if we're talking about Tarek of Affinity, he's doing a great job, a good friend of mine. So he's right and wrong. I mean, it's something we can debate, all day long. But if you take the banking as a service or banking as an infrastructure-led business, there's nothing stopping banks from integrating or handshaking their systems, such that there's a seamless transition. An account comes with a card, comes with a checkbook, comes with every other tool that you need to run the account, right? Now, what regulation has sort of done is to layer the KYC on tools that enable fraud, right? Now, in the past, because of the gap in knowledge, right, we had a lot of fraud being perpetrated through cards. Today, we don't see that as much as we used to do in the past, what we see is a lot more social engineering, but not fraud through the transaction activity. So those have informed or sought to protect banks from running into severe losses, because perpetrators can get hold of these cards and then do what they're not supposed to do. So it's a function of risk, it's a function of what banks have an appetite for. Okay, so I think today the regulation allows banks to have low-tiered KYC accounts, which can have cards, but it also depends on the profiling of the customer, whether they have the requisite, mindset or know-how to be able to transact with the card, because maintaining the plastic, in that technology infrastructure comes at a cost to the banks. And most banks are trying to shy away from heavy costs as well. So they'll much rather push them towards low KYC accounts linked to wallets, and the wallets have agency infrastructure built on there, rather than push them towards the card that has limited infrastructure in terms of ATMs, point of sale, and online terminals.
All right, so I had a question with regards to adoption in the Ghanaian ecosystem, especially when we see cards in, Nigeria, our sister country, and they are mostly adopted as compared to Ghana. And so basically, I wanted to find out from your experience, what is exactly what's the deciding factor, and why is it that Ghanaians are slow to react to the card, even though there's been a lot of major changes in the ecosystem?
Right. I think that's a brilliant question. That's a good observation as well. If you look at, the ends of the continent, right? If you look at North Africa, if you look at South Africa, look at West, the populous countries all have, a lot of budding activity in the area of cards. So Egypt is a good example. Nigeria is a good example from the West. South Africa, budding activity on cards. Kenya, budding activity, but Kenya is an outlier, by the way. You see Tanzania growing on cards. Uganda heavy on cards. And I'll touch on the Kenyan example. I think Ghana have been slow to react to cards because the introduction of the product came at a time where it was made to look like an affluent product. And so the masses were left out. Education has always been a problem. How to use the product has been a problem. And the way it was introduced to the public was a problem. I mean, it dates back to the history that I just gave on how it was introduced into the country. Now, like I said, as a people, we've had both the element of trust and then the element of cost informing our decision on how to pay. Right? So because the GDP of the country was or had been low in the past, we had people in the villages who were receptive to receiving money on mobile wallets because they could easily walk to agents and then cash it out, right? So that's a function of their living standard and their psyche.
Yeah.
Okay, and that also informed the adoption of wallets, in Ghana as we have it today. But that being said, what a company like mine is doing to solve in a country like Ghana is we're coming out with products that are digital by default and design. Okay, so I mean, if MDP is rolling out a card product, the first item we look at is how does it relate to the user's mobile phone, or how does the bank embed a mobile component to that particular card? And until payment processors or third-party providers that are responsible for the issuance and processing of cards introduce the digital element to that product, we will always see a slow decline or a slow growth to the product.
So I know there are types of cards. So there's a credit, there's a debit, and there's prepaid, things like that. You think, I know Ghana predominantly is a debit cards buckets. Could the other forms of cards, could it help increase the penetration, also help with financial inclusion as well? Could that be a solution?
So I think we need to first start by understanding how those three types of cards work, right? Now, in layman terms, there's the pay now, there's a pay before, there's a pay now, and then there's a pay later. Okay. The pay before is what we like to term as prepaid, right? So you need to make a payment onto the card before you can use it, right? So it's designed for you to make a payment or make a prepayment and lock in a specific amount or a budget before you can use that card. And then there's a pay now. So the pay now means that it's directly linked to the funds you have in your account. And so as you swipe, as you utilize the card, you're actually drawing from the funds in your account. The pay later is a credit card. Obviously, you're spending the bank's money and making a payment onto that card at a later time. So once we understand the balance of power, between these three types of cards, we will be able to relate it to the psyche of the average, consumer, and understand where we are as a people in promoting, for instance, the likes of pay before or even pay later, because most banks introduce debit cards from the onset. They are sort of used to that idea, used to that technology. There's nothing stopping banks from introducing prepaid cards, and today prepaid cards are among the most used in developed countries, because it alienates or eliminates the rigidity around having a bank account before you can get an access to the card. For credit card, the average Ghanaian will shy away from a loan. And if you look at the loan books of most of the banks, is significantly low because Ghanaians, as a people, do not like to owe. In the past, we've also, as an industry, not seen a lot more credit cards because of our address system and, us being able to identify and locate people. But now, thankfully, that has been resolved. We have the Ghana Post GPS that helps us locate people.
Kind of has been.
And we have other forms of addressing and biometrics, introduced in the KYC system. And so I think slowly, with the credit bureaus that have been also licensed by the central bank, we will begin to see a lot more credit cards being issued, and banks seeking to grow their loan book, because banking cannot be done the way it used to be, prior COVID. Post-COVID, after all the things happened, DDEP, there's a lot more that, needs to be done for banks to make a lot more money in the area of transaction banking.
Nice. So I want to ask this question about, when a transaction happens, the various partners that are involved, and probably talk a little bit more about, the card network like Visa and MasterCard. But I want us to step back, talk about you yourself, like what's your upbringing, what's your education, and how did you end up in, working in cards and payments? Yeah.
Right. So I'm an economist by training.
Nice.
And
what school?
Exeter University in the UK.
Okay.
Before
then, what high school did you do?
Advancement.
Oh, nice.
Okay.
Nice.
So you grew up in Ghana?
Yes.
Okay.
So they usually, a long silence after you mention advancement. No other school compares, right?
Oh.
Yes. No, we're not getting into that.
Yeah, we're not getting there.
But yes, I'm an economist by training, and I chanced into the area of cards, not by accident, but just in time. I came back into Ghana in 2014, and I think it was just at the time that electronic banking was peaking.
Okay.
And so I got into EcoBank, started my career over in EcoBank, rose to the ranks.
What did you start as? What was your role when you started?
So in EcoBank, I worked in the cards and electronic banking department as a business analyst. I took advantage of an opportunity that came up in the industry and jumped ship into Guarantee Trust Bank almost about a year and a half after being with EcoBank. And, getting into GT Bank, if you know GT Bank, it's a bank that does not follow the status quo. They like to break protocol with regards to, products, with regards to innovation, and that's a place that really helped.
When I was in senior high, I tried to get a bank from a bank. I won't mention their name.
Mhm.
They frustrated me so much. And I got to GT Bank and they gave me a card. It was cool. It was simple. I mean, at that time, it took 6 weeks, but it was better than
It still got you somewhere.
Yeah.
Yeah. So from GT, but I think GT Bank gave me an opportunity to learn managerial activity in how to work and manage stakeholders. I did GT Bank for 3 years, moved to Fidelity Bank, big bank, big numbers, Ghanaian bank, helping to grow an indigenous bank with a foreign mindset. It's a bank that has a lot of global aspirations, but they like the local, think global but act local, feel, and you can tell by the youthful brand that it has, very respected brand as well, done significantly well in the industry. So that has, been my short but long journey in the space. Bringing it or focusing on your question, I think the economics of cards is centered around 3 players, right? There's a consumer, there's a bank, and then there's the scheme. But the organization or the party that links all these 3 players are partners like us. The ecosystem refers to us as third-party providers or third-party payments service providers. And so what we do is, like I said, we connect banks to Visa and MasterCard, and we enable the end user spend directly from the account. So the entire infrastructure is provided by us. We provide banking as a service or transaction, as a service for banks to be able to serve their customers. So that's the brief economics around the cards.
So just a little bit practical. So if I have a card from a bank and if I do a transaction, let's say I have a MasterCard, where's the touch points? How does this all route? Where is the charge? And also you could bring it to, where profit is being made, what's being charged and all those stuff. If let's say I use my card on hotel, right?
Mm-hmm.
Like where's the touch points? How does it get transferred from my bank to hotel's accounts? How does MasterCard play a role? How does your company MDP play a role? How does it all go?
All right, thank you. So I think I like to focus on the benefits to the users, in the chain, right? So the first user is the guy who's making the payment. Now, the fact that you can sit in the comfort of your home, pull out your plastic or your card and then punch in the 16 digits and effect a payment in a secured manner directly from your account into Hubtel's account or any other merchant's account, is genius, right? And whoever is making that possible should get paid, right? So that's the concept that we run with. Now, the bank is fronting this engagement to say, I have partners behind me that are facilitating the handshake between your bank account and the merchant's bank account. There are also hardware or software in the middle that are being powered by partners that are related to me, the bank. At the end of the day, what the bank is doing is ensuring the exchange of money is done in a secure manner, and it's facilitating that process to benefit. So the way it typically works is MasterCard or Visa standing in between a transaction as a scheme is serving as a referee between the buyer and the seller. Okay, so they are looking at the flow of money and seeing that there's no foul play in that transaction. So funds would effectively move from your bank account into his bank account, in a smooth or operating by the rules of the game. What are the rules of the game? We need to be sure that you're indeed the owner of the card that you're trying to pay with, right? Once we can confirm that you're the owner of the card you're trying to pay with, money will move from your card or from your bank account into his bank account. And again, we need to also ensure that you're providing services to her, right? So we run the checks in the background to ensure that you're also playing by the rules of the game, to ensure that the funds move directly from her bank account into yours. So that's the role of the scheme. The guy who's doing the lifting or the communication between your bank and his bank is the third party provider. That's where MDP comes in. So MDP is responsible for ensuring that the communication between bank A and bank B are done in a very secure manner, and we are actually taking the data elements that the scheme or the referee has given us, right, from your bank into his bank. And everybody in the chain, the bank, the third party provider, and the scheme are getting paid from the movement of funds from your bank account. So that simply is how money is made. There's an underlining revenue generator in all this, and it's called the interchange, right? How the banks make money is the bank that is gaining deposits, right? So his bank is gaining the deposits from your bank, right? So if his bank is gaining the deposits, his bank needs to pay your bank a portion of the transaction amount, which is referred to as interchange. Okay, so those are the rules of the game.
Is that cost transferred to the consumer?
Often it is, but the banks have a clever way of doing it such that you may or may not see it in that transaction. It may come in another form. So maintenance fees are a function of some of the costs that you
because typically for my bank, if I do a local transaction on a POS, I just pay the value of the products or services that I'm being charged, and I don't get charged any extra. So it means that the charge will be, the profit will be in the card maintenance costs, basically.
So typically, and I know this because in my banking life, we used to regulate the flow of funds that came in from card transactions. Typically, what the receiving bank will do is that once they receive the funds, they do not settle immediately, right? The funds will be used for treasury purposes to generate what we call funds transfer pricing, or FTP, on the amount. And the lending or the interbank borrowing and lending that go on with that particular funds received through the card transaction, helps negate some of the cost elements that come with paying another bank. So the banks have, clever ways of making money on that transaction to help negate the cost associated with the transaction received.
So as we wrap up, what are some of the trends that you see happening in the future, especially in our landscape?
I think mobile phones play an integral role in the future on the introduction of technology. Today, digital banks are thriving in West Africa because of the power of the mobile phone and the penetration it has, in most economies in West Africa. for a youthful, population across the sub-region. We see that social media and even, open banking is becoming a thing, right? In the area of plastics, we have the eco-friendly cards being introduced, all promoting the SDG agenda of most banks, trying to go green and helping us recycle the plastics that are introduced into the environment. So the trends that we're seeing are as a result of, the global economy and how it's shaping our lives and future. I think digital cards or virtual cards are here to stay. You would see a lot more banks come up with card products going into next year and have, mobile applications that help you regulate and manage that card. And you will see digital banks springing, out of those particular, products that have been rolled out. So I think in a nutshell, we're going to see a lot more innovation around, card payment. We're going to see a lot more digital activity. We're going to see value chain being linked, into the act of payments. And then we're also going to see the other ancillary, services arise, things like SDG, eco-friendly activities all coming out of card payments.
Nice. So I have this question. So I think earlier, sometimes this year, MasterCard announced a partnership with MTN to be able to draw funds from your mobile wallet. What's your reaction to that, and how do you think that will play out in the long run?
Great initiative. I think, like I said, earlier, cards are not here to compete against wallets. We complement each other. We've been working way before the mobile phone came to separate us. But what we are seeing with companies like MasterCard and MTN coming together for a product like this is a testament of, the hard work that has been done by both banks and telcos, to promote the payments ecosystem. At the end of the day, the common enemy we're working to negate is cash. And once we are able to eliminate cash from the ecosystem, we all win. It's instructive to know that today MDP has also signed a deal with Orange in Egypt to promote a similar agenda. And we are actively working to expand that to other telcos. So to the telcos here in Ghana, please, we'll be knocking at your doors to collaborate to help issue cards that are linked directly to the mobile wallets, so that consumers can benefit in the long run.
Nice, sweet. So this news article, I think earlier this year we had Eric Isako on our show, and we were discussing this. I think Gibbs signed a partnership with Visa to process local processing. What's the details, if you know anything about it, and I think what was the benefit to the consumer and the banking sector at large?
I think as a Ghanaian, is a proud moment, that every Ghanaian has to, to take, right? And what you see in that transaction is two big organizations realizing that the common goal is placing the card in the hands of the consumer and reducing some of the frictions that currently exist in card payments and transactions today. If you've ever had a transaction decline but funds debited from your card on another bank ATM, you would understand and appreciate this handshake between Gibbs and Visa. So in the past, between banks, you would have to allow about 91 days for a dispute to be settled, right, between Bank A and Bank B, because of the players involved and because most transactions that were happening in Ghana were terminating somewhere overseas. Now, through the central bank and through regulation, what has been done is players like Visa have to localize their operations in the sense that the transactions or the data set need to sit here. If Aquile's, funds did not come out from the ATM of another bank, the lead time for Aquile to get her funds back is maximum T+1 or T+2, depending on the arrangement between the local banks. And that is actually where we need to be. That's from a consumer perspective. From a regulatory and national perspective, it helps us keep the data restored, in Ghana. And there's a lot more national pride that go behind some of these transactions. Putting an on-soil infrastructure like the Visa network inside of GIPS and helping the banks connect directly into it. Thanks.
Looking at this conversation, what are some opportunities for fintechs, especially who want to, play in the card game? What are some opportunities they can grab?
So I think, again, I'll throw this out to all the fintechs, listening to this particular podcast. A time is coming where fintechs can issue cards as well, right? Either in the form of stored value or in the form of pay later, coming up with, a credit score on their mobile app or on the applications, and us helping them put a card behind it to create that revolving credit or revolving behavior. I think regulation, is leaning towards, a lot more innovation in the space. And so we will not only see banks issue cards, but we will begin to see fintechs issuing cards. I'm looking forward to the day that a fintech would announce the first cards. We're actually working with some fintechs here in Ghana to roll out, their first debit and prepaid cards. No names mentioned yet, but you begin to see a lot more of that from 2025. In fact, one of these announcements are going to come and
You can announce it here.
well, we're still not in 2025, so
We invite you back in 2025.
so yeah, you can invite me back and then I'll do that announcement.
Cool. So I have one last question, and I think we can call it a day. So I see a trend where a lot of bankers are moving into fintech, right? And I think it's an interesting one, especially bankers have a lot of deep expertise in finance, and when they move to fintech, I want you to speak to a banker listening who
Right.
wants to make that switch. What would you tell them from your experience?
Okay, so it's an interesting question. I get this a lot, right? How's the transition like? How's the experience like? I think I haven't done pure banking, so I haven't done the lending and the credits and the bookkeeping and relationship management. I think right from the beginning of my banking journey, it's all been transactional, right? So looking at electronic banking and electronic payments. So it's an easy transition for me. Easy in the sense that this is what I've been doing, the past 14 years, doing it, in a much, larger scale, and looking at, the interplays between banks, fintechs, and the role we play. Now, I think the space is evolving, it's growing, and we are beginning to see fintech focus more on, lifestyle services than payment services. Okay, and that's where bankers need to take advantage of. So fintechs are beginning to come up with, sector-driven products. Products that focus on tourism, products that focus on agriculture, products that focus on SME, as a service. And that is where bankers are needed, because they've been doing, the end-to-end management of these customers, and they understand the psyche of these customers. And so the technology is not in short supply. It's the knowledge of how to manage the behavioral aspect of the consumer that is in short supply. So the space is very right for bankers to keep jumping, come into the fold, come and let's work together.
Great. Thank you very much. So check out some opportunities.
Okay. So let's talk about the first opportunity, which of course Demo Fridays is coming up, December 20th. And yeah, we're gonna see you when you register and we admit you. The second opportunity is GIZ and We Do Ghana are allowing you to apply for grants and coaching for your green business. So you can apply till December 20th. And especially if you have an agribusiness, I think their business model is you bring in money, they times two it, but you can check them out. And yeah, the second, the third opportunity is Obama Foundation Leaders. I think it's a great opportunity to improve on your leadership skills with a global community. So you can also check that part out. We also have the Climate and Care Initiative Fund, which supports climate and care um, initiatives in Sub-Saharan Africa, Latin America, Caribbean, and so many other parts of the global south. And you can get up to 50,000 US dollars per your project. And the deadline is December 10th. So you can access the opportunity as well. The last two will be for Tech for Good. Tech for Good is giving you up to 60,000 euros investment, which is 7% equity, and 6 weeks of intensive training for prototype stage businesses. So if you have a pre-seed that is in the green, that is ready for investment, yeah, they are in partnership with Bethnal Green Ventures. So you can check them out, bethnalgreenventures.com/apply. Deadline is January 5th. And then the last one is Innovations Against Poverty Challenge Fund. Offers matching grants ranging from 50,000 euros to 200,000 euros. And they are giving it to businesses who are ready to scale their inclusive innovations. Yes, so you can also check them out. Deadline is January 15th, and this is brought to you by Grants Pilot. Thank you. What's you? Yeah.
Thank you, Akweli. Thank you very much for coming.
Right,
To our
thank you.
listeners, thank you for tuning in. If you haven't subscribed, please subscribe. See you on the next episode. Bye.